All right, today we're diving into Capstone Green Energy. And look, this isn't just going to be another boring earnings report. No, this is really the story of a massive turnaround, a profitable pivot that has the company posting some of its best results in years. So let's get into it and break down exactly how they're pulling this off.
So this is the big question, right? How on earth does a company shake off what its own management calls a Chapter 11 hangover and totally flip the script on its own story? Well, the answer really lies in a mix of smart strategy, serious discipline, and, believe it or not, one really important number.
And that number is 5. That's 5 straight quarters where they've had positive adjusted EBITDA. That's a super important metric for a company's operating health. For a business just coming out of a huge restructuring, management is calling this a historic achievement, and you can see why. This isn't just a lucky break, it's a real pattern, and it's signaling a huge shift towards being profitable for the long haul.
Okay, let's jump into the numbers. We're going to deconstruct this breakout performance because the data really proves that this turnaround story is the real deal.
Okay, just look at this table for a second. The story it tells is pretty incredible. First off, revenue is up a whopping 78% from last year, hitting almost $28 million. But here's the kicker. It's not just that they're selling more, they're selling it more profitably. Their gross margin went up by 300 basis points. That's a full 3 percentage points to 27%. And that net loss, it's shrunk by a ton. This is literally a picture of a company getting its financial house in order, from the top line all the way to the bottom.
So you're probably wondering, where did that giant 78% revenue boost come from? Well, it was really fired up by 2 main engines. First, you've got this insane 190% surge in their systems revenue. That was mostly driven by delivering a single, huge 6-megawatt microgrid project out in California. And then their energy as a service business, or EAS, that grew 77%, mainly because of strong demand from the oil and gas industry.
And this chart just perfectly shows the scale of this change. Look at that jump from last year to this year. That $2.7 million in adjusted EBITDA this quarter, it wasn't a fluke. It's the 5th positive quarter in a row, and if you add it all up, it's over $10 million in that time. This is what a trend looks like. It shows that their new operational discipline is really working.
But great numbers are just the outcome, right? What's the playbook that's getting them there? Let's dig a little deeper into the strategy and the discipline that's really fueling all this growth.
So management points to this 3-pillar strategy. Pillar 1, financial health. That's all about making sure those profitable quarters we just saw become the new normal, not just a one-off. Pillar 2 is sustainable excellence. That means getting super efficient and saving money, and we have a great example of that coming up. And finally, culture, building a team that's resilient, accountable, and ready to execute.
Now, a huge piece of this new playbook is a massive shift in how they go to market. They just bought their longtime distributor for the Western U.S., a company called Cal Microturbine. They're turning it into their own direct sales and service operation called Capstone West. This is a game-changing move, especially in what is their most important region.
Okay, so why is this such a big deal? It really comes down to the difference between these two models. Before, with the distributor, they were splitting the profits and they didn't have a direct line to their actual customers. By going direct with Capstone West, the goal is to capture 100% of the value, get that direct, unfiltered customer feedback, and basically control their own destiny to grow faster.
And when we say value chain, we mean the whole shebang. From the initial sale to all the ongoing service contracts and even the super profitable rental business. By taking control of all of it, management is saying this move will be immediately accretive. That's just a fancy finance way of saying it should start adding to their profits and EBITDA right away.
Now for that awesome example of sustainable excellence I mentioned. This is just a perfect little case study. They call the process DFMA. They found this one part, a battery enclosure, that was costing them $900 a pop. So they did a deep dive, looked at what it should cost, and then went out and found new suppliers. The result? They got the price down to $350. That is a 61% savings on one component. That's tangible proof of their new discipline at work.
So what about the future? How much can they grow? This number is just fascinating to me. 12%. That is how much of their manufacturing capacity they're using right now on just a single shift. Think about that. They have this massive runway to scale up production all the way to 400 megawatts without having to spend a ton of new money. The foundation for serious growth is already there, just waiting.
So, the turnaround is happening, the potential is obvious. Let's wrap this up by looking ahead. What are the key things to watch for that'll tell us if they can keep this momentum going? All right, here's your checklist. First, how well do they integrate that new Capstone West business? Execution is everything. Second, they've got about $8 million in short-term debt to deal with. Can they handle that successfully?
Third, they're hitting the road to talk to investors. Will that get them more attention and analyst coverage? And finally, the big one, the next earnings report. That's going to be a huge check-in on their goal to hit over $100 million in revenue this year.
You know, in the end, it all comes down to execution. And I honestly don't think you can summarize the company's new confident, no-nonsense culture any better than this direct quote from the CEO. It's so blunt, so clear, it basically says, the time for talking is over, and the era of just getting it done has officially begun.